What's going on, guys? It's Matt Fractal. As you know, we get straight into the videos, so let's get it. As you can see, we're on a dollar index chart. We're on a daily time frame, and I wanted to make this video to show you guys that even in small daily ranges like this, or like today, the 29th, or just these small bodied candles on a daily chart, that doesn't mean you can't be profitable. So I just want to show you how you can do that. So let's zoom in to the last 20 days of price action. Sorry. Right. Last 20 days is about this this low to this high. Right. So as you can see, price is in a premium. Just grab my Fibonacci to show you from this low to this high. Price is above the 50%. So the dollar index today was in a premium in reference to the last 20 days of price action, right? So with that being said, if I'm in a premium, I'm looking for bearish PD arrays or bearish resistance, if you want to call it that. So what I can see is this order block, 1, 2, and 3. This constitutes as a order block. So I drew that out, right? But as you can see, we kind of went deeper into the order block and not just the opening. So you can keep that on your chart, but you want to be more refined. You zoom in and you can notice that there is a breaker. This high down to this low, and we trade up and we break this high. These last 3 down close candles becomes a breaker. Once we break structure again. So the breaker is a high, it makes a low, and then it makes a higher high. So we take out the stops. But then once we break the structure again and we trade back up into the breaker, these last 3 down close candles, you can you most likely see some type of resistance play. So I'm gonna grab this tool and get the 50% of the breaker, right? Which would be here. So we're using the bodies, this high, oh, not the high, this open to this closing price. This is the breaker. And we have that 50, and we have our quadrants. As you can see, we have a more precise quadrant at 0.25, but we're gonna just use the 50 because that's what, most of the ICT traders use on SMC. We use the 50% of order blocks, fair value gaps, and mostly all the PD arrays. So let's draw out line out, and we'll constitute this as the breaker. And the reason why I'm drawing that out is because we're above that 50% in the last 20 days. So I'm looking for bearish PD arrays to see if price can trade into it and then reverse back down into a discount price, which would be again below that 50%. So this order block, this fair value gap, this old low, right? Just keeping it clean, even this fair value gap here, right? This fair value gap. But since we're in a premium, we're looking for bearishness. So my PD array for today was this breaker. Now going into a 1 hour, we have levels on the chart, right? Okay, cool. This was our 1 hour time frame. We have this daily level and this daily level. Notice how we have it play as a resistance, also as support. But just zooming in onto today being the 3rd, notice how we started at that PD array, we traded down. Intraday, we don't need most of those levels. All we need to know is what is the daily bias. So as I told you, we're in a premium, right? On a 20-day basis. We're looking for price to trade up into daily bearish PD arrays, which it did. It traded up into that 50% of the breaker, which is here. And this is also the order block opening price, which we, blast through. We had some support here at 7 a.m. on the 2nd, which was yesterday. That was a buy. And then we had a breakdown, retracement into a fair value gap, right? That's a sell. And then we had another break lower under this old low. So when we're trading back up, and then here, back into this gap, let's draw that out, right? This is where, and really we have to look at the time too. What time does price trade up into this gap? 10 a.m. Also, notice that we have a run on stops as well. Right? So intraday, we also have a bearish play. So notice how it's fractal, how the daily chart is bearish, we're in a premium. But in today, the 3rd of December, we're also looking for something bearish on the 1-hour chart as well. So as you can see, price trades up at 10 a.m. above an old high into this volume imbalance here. Let's change this color. Right? Trade up into a bearish volume imbalance above an old high. Now, what do you think price would try to gravitate towards after running an old high at 10 a.m. London close? Let me zoom out a little bit. Right? If we're running stops here at 10 a.m., where is like the nearest term of liquidity that can be turned over? Obviously, this old low. Right? So now we have a range. Notice how ranges are very important. Excuse that. We run this old high here into fair value. Well, not fair value, into volume imbalance. So volume was not present here. So if price trades into it, there's a high likely chance that there's going to be some sensitivity. Coupled with a run above old high stops, buy stops, it's just a double whammy. So if I zoom in and we create our range, high to low, I can now go on a smaller time frame or a lower time frame, like a 15-minute chart. Right? And now I have a range intraday with some daily levels on the chart, keep me in a higher time frame perspective. But just looking at the intraday chart now, if you guys are wondering why I put a horizontal line on 12 a.m., is because that is the New York true opening price, right? So the dollar opens around like 6 on a regular 6 p.m., but we like to look at the 12 a.m. new day open, true day, okay? Just a little pointer. But back to the price action, we run an old high in the London close, and then we have a break on the 15-minute chart. Last, the last up close candle, and we had two down close candles. I'm gonna let you guys zoom in, and I'm gonna show you something that nobody really teaches. But for a confirmation, right? If you run a old high and then you break down, this is like a confirmation, right? This breakdown showing that stops have been taken and orders have been filled. So now reversal, we break down and we break this up close candle, meaning now this is an order block. There's buy orders here in this up close candle. So when we break down and we trade back up, we offset those positions here and we take on new selling, right? Because now it's an order block after taking stops. So now orders are blocked from going higher. Notice how we have the bodies here. But more importantly, where is this 11 a.m. candle trading to? It's trading slightly back above this same exact old high. Why is price doing that? Because it's a greedy market. It's a very efficient market, but no one seems to mention that the market is greedy. It comes right back up above this old high to take a few more buy stops before shooting down, retracing, and then breaking structure again, creating another order block. This last up close candle. But not just any order block, this becomes a propulsion block, meaning that it respected the first order block, the previous one, the first one here. It respected it. Boom. Now, once we break this up close candle, it becomes a propulsion block. The reason why it becomes a propulsion block because look what happens when we trade back up into it. We break, and then we trade back up into that mean threshold again. But look at the propulsion of 1245. Boom. So yes, we traded up into that first order block. We had 1, 2, 3, 4 candles trade lower to break the structure. Well, maybe 1, 2, 3 candles to break the structure to be exact, but 4 down candles in general. Notice how we had a retracement into the propulsion candle, and then it only took one candle to break structure, and then another one to clear stops. So now if I go on a 1-minute chart, right? A lot of people say 1-minute chart's just noise. I think it's precision. So this is the thumbnail you guys are going to see, right? So we trade up into that imbalance, volume imbalance to be exact, because there was no volume there. Plus we traded up into this old high on the hourly. Notice how this old high on the hourly equates to equal highs on the 1-minute chart. So no, it's not noise, it's just time distortion. So that 1 hour swing high is just a double top on the 1-minute chart. So when we get that 1-minute high or that 1-minute double high taken at 10 a.m., which is basically that 1 hour high getting taken, right? We have those candles that went down I told you and we created the order block. It's the same thing on the smaller time frames. We have an order block here. This one, this up close candle, we break it and then we trade back up here right above that old high again to take being greedy, the market always being greedy. and trying to take everyone out with no regard. They take more people out and they get this is also giving people like me and you guys as well, when you guys learn how to do this, this is going to be great for us when we're trading alongside the smart money because this is another entry. We have that first entry if we miss it, but this is our second entry, which ICT usually calls the. So first we have the smart money reversal, which would be taking a short here, and then we have that first reaccumulation, right? Well, this is a sell model, so this would be a redistribution. And then we have a break-in structure, and we have another redistribution, and then we take the full low. So this is basically my fractal sell model, which is, yes, we're trading above old high, but I'm not a greedy person, but I know the market's greedy. So I know when I can be aligned with them. And that's when they go back above that old high to get one last entry or to take one last person out, right? And then you would wait until you hit your terminus would be the old low, and that would be the complete model. So I hope you guys learned something from this video. If you guys can, join our Telegram, our Time Precision FX Telegram, link in the description, and enjoy your night, guys.